In recent videos, I've talked a lot about the problems that we see in the global economy, the issues around investments, and why we have been defensive over the last year or so. Now, as a client of ours, if you invest with us, I'm sure you're glad that we've made lower losses than the peer group and the benchmarks that we follow. But of course, also as clients, you don't invest in order to make less losses than other people. The reason you invest is to make a positive return and to use that to help you achieve your objectives over time. So rather than focus on all of the problems that there are in the world, I'm going to spend this month's video trying to explain the framework and approaches that we're using even today to try and ensure that we deliver a positive return for you and the return that you need to achieve your objectives. There are three basic strategies we use today to try and make sure that we can achieve the returns that you need. The first is very simple, and it's time. I'm really confident if we held the assets that you all have in the portfolios with us for a long enough time, the returns that we get from them will be attractive. The reason for that is that all the assets that we hold, they're all driven over time by global economic growth, and that's highly predictable, and the drivers of global economic growth are very stable. So no matter what happens in the short term, you can always be confident that if you are stable and patient, you should be able to achieve good returns. The second thing is more specific to something that we're doing, which is tilting the portfolio towards areas of relative value. And what I mean by that is looking at different asset classes and comparing them to their own price history and making sure we only buy assets, or we're heavily invested in assets that look cheap relative to their own history. And in the times in the past when they've traded at these kind of values, people have made a good return. Now, we're overwhelmingly doing that in our equity portfolio, so big positions in the UK, value style investing and emerging markets, and that gives me a lot of confidence that as we go through this period, returns eventually will be good. And the last thing is trading, and this applies much more actually to the bond portfolio. So as we go from a world which has a very stable background of lower and lower inflation, lower and lower interest rates and globalization, to one which has the opposite, higher interest rates, deglobalization and inflation, actually that process is not going to be a smooth one. The world isn't going to switch to realize that it's in a new position straight away. There's going to be a lot of what I would call chop, and especially in the bond market. So expectations for inflation in the future, I think, are going to go up and down quite a lot. And that means inflation-linked bonds, whose price is governed by expectations for inflation, they are potentially going to move up and down. So we think we can trade inflation-linked bonds much more actively than we've done in the past. And the second area in the bond portfolios is junk bonds. We've recently bought a position in junk bonds because the yields have spiked up to an attractive level. But actually over time, I think we'll go through periods where people become more complacent and yields fall and the junk bond prices rise, and that will probably give us an opportunity to sell out of those holdings. And we may well be able to do these things several times over the next few years. So actually, I think trading now is going to become an important source of returns for our clients. I hope I've been able to explain why we're confident that we can continue to produce good returns on a relative basis compared to the peer group and the benchmarks that we use, but also why we're confident that we design the portfolios in a way that should deliver a good absolute return, which is what people need to achieve their own personal financial objectives. As with all of the content that I create, if you've got any questions, please contact me directly. I'd love to speak to you, and I'll answer any questions that you have. I must remind you that I've been talking about investments, and as with all investments, your capital is at risk. And lastly, if you do like the content and you want to see it automatically as it comes up, please click on this icon and you would be subscribed to our YouTube feed. Thank you very much.